Imagine you're at the helm of a business empire. You've got your hands in various spots, from shipping goods worldwide to tapping into oil and gas. Money is flowing, but how do you measure the profit in all this financial jigsaw? Well, welcome to the world of EBIT and EBITDA, where we decode the secret sauce behind a company's financial health. In this video, we'll demystify these financial terms and why they matter using real-world examples to make the numbers come to life. EBIT, which stands for earnings before interest and taxes, and EBITDA, earnings before interest, taxes, depreciation, and amortization, are like financial x-rays that reveal what's happening beneath the surface. We'll explore a fictional company called Global Gas and use these metrics to give you a deeper insight into its profitability beyond just the bottom line. It's not just about numbers, it's about making smarter financial decisions in a complex business landscape. So, fasten your seatbelts because by the end of this video, you'll be equipped with the knowledge to see through the financial fog and understand why EBIT and EBITDA are the keys to unlocking the true value of a company. Now that we've set the stage, let's uncover the intricacies of EBIT and EBITDA. Picture yourself as the CEO of a thriving business empire, with your fingers in multiple pies. You're in charge of a global shipping giant, dabbling in oil and gas and overseeing terminals and drilling operations. Money is flowing in, but how do you decipher the proper financial health of this complex enterprise? The answer lies in EBIT and EBITDA. EBIT, or earnings before interest and taxes, and its big brother, EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization, are like financial x-rays. They allow us to see beyond the surface level numbers, providing crucial insights into a company's profitability. So, let's break it down. EBIT is where our financial journey begins. Consider it the starting point, where we strip away interest and taxes. Why do we do this? Well, it helps us focus solely on the company's operational performance, irrespective of its financing structure and tax decisions. EBIT is like peeling away the layers to reveal the core of a company's profitability. Now, let's turn our attention to EBITDA, the superhero of financial metrics. EBITDA takes EBIT and supercharges it by excluding interest, taxes, depreciation, and amortization. These fancy terms represent the gradual wear and tear of assets over time. In simpler terms, EBITDA reveals the raw earning power of a business, free from the shackles of non-cash expenses. But why should you care about these metrics? Well, they offer different lenses through which view profitability. Let's revisit the case of Global Gas, an example global shipping company. In 2015, their sales were 15% lower than the previous year, and their profit went down by a whopping 82%. But is profit the best way to see how well they're doing? Global Gas offers other ways to see this. They give you options like EBIT and EBITDA. These show different views of profit. EBIT was down 68% and EBITDA was down 24%. Depreciation and amortization are kind of like fixed bills. They don't change depending on how many things you sell. They're based on how you spend on stuff like trucks and how long you'll use them. For Global Gas, which uses a lot of expensive equipment, their depreciation in 2015 was a massive $8 billion, nearly 20% of their sales. This insight is invaluable for investors, allowing them to gauge the company's core performance. So to truly appreciate EBIT and EBITDA, we need to understand the concept of depreciation. Imagine you've purchased a truck for your business. Rather than recording the entire cost as an expense in the current year, you spread it out over several years as depreciation. This accounting method acknowledges that the truck's value diminishes gradually as it ages. Depreciation impacts EBIT but doesn't weigh down EBITDA, focusing solely on operational earnings. Now, where do EBIT and EBITDA fit within your financial statements? Picture them right in the heart of your income statement, sandwiched between gross profit and net income. To get to EBITDA, you subtract depreciation and amortization from gross profit. Then, to reach EBIT, you further deduct interest and taxes from EBITDA. But here's the twist. Different companies may use varying terminology. What you see on one company's financial statements might differ from another's. Some industries, especially those heavy on services like consultancy, may not even bother with EBITDA and EBIT because they have minimal physical assets to account for. Now, why does EBITDA often take the spotlight in mergers and acquisitions or M&A discussions? Well, it offers a quick and dirty way to estimate a company's value. By applying a multiple to EBITDA, you can arrive at a ballpark figure. However, a word of caution, this approach oversimplifies the financial landscape. It doesn't consider changes in profitability, working capital needs, or ongoing capital expenditures. In summary, EBIT and EBITDA are your financial compasses, guiding you through the complex world of business finances. They provide a deeper understanding of a company's performance, especially in capital-intensive industries. Armed with this knowledge, you're better equipped to make informed financial decisions and navigate the complexities of the business world. So, the next time you find yourself poring over financial reports or contemplating investments, remember the power of EBIT and EBITDA. And they're not just acronyms, they're the keys to unlocking the true financial health of a company. And there you have it, the inside scoop on EBIT and EBITDA. We've taken you on a journey through the financial maze, revealing how these metrics can be your guiding light in the world of business. Now, it's your turn. Here's a question. Have you ever encountered EBIT or EBITDA in financial reports? And did you fully grasp their significance? Share your thoughts in the comments below. We'd love to hear from you. But before you go, remember to hit that like button if you found this video enlightening. And if you haven't already, be sure to subscribe to Kountin Koins for more captivating insights into the world of finance. We're here to help you make smarter financial decisions, one video at a time. And if you know someone who could benefit from this knowledge, go ahead and share this video with them. After all, the more we understand the financial intricacies of the business world, the better equipped we are to succeed. Thanks for joining us on this journey through EBIT and EBITDA. Stay curious, stay informed, and we'll catch you in the next video.